Charts are deceiving, and it seems that most people are falling into this trap. The whales continue to gather more as they laugh at you. Don't fall for it. This video is very important. Let's not spend any more time and go right to the point. The truth is here. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the curve in the crypto industry, subscribe. To get more SHIB news, be sure to click the like button. It was recently found that for the 13th day in a row, gains in Bitcoin ETFs totaled an amazing $49 million. That kind of steady stream of inflows is really significant, indicating a degree of positive attitude we haven't seen in a long time. There is a noticeable stir in the town, and many people are characterizing it as bulls getting ready. But for what specific purpose are they preparing? We are about to see a massive bull run, according to an image with a chart that has begun to acquire popularity on Twitter. The description for this photograph reads, "It's so obvious, you just need some patience." Indeed, the creator of this image is correct. We all tend to forget that the Bitcoin halving event occurred just a month ago, which is a crucial fact. And historically, these occurrences provide as the impetus for significant bull runs. The effect takes time to manifest, however. The market takes some time to calm down after the first wave of news-fueled speculation. When a big event like this happens, there's a lot of hype and conjecture, which makes the market volatile since lots of people become involved. The positive effect of the halving may be obscured by this increased activity. The real implications of the halving become apparent when the market calms and the hysteria passes. For example, after the July 2016 halving, the price of Bitcoin was originally somewhat constant, but by December 2017, it had risen from around $650 to about $20,000. In a similar vein, the price of Bitcoin stayed at $9,000 for a time after the May 2020 halving before surging to almost $60,000 by April 2021. These past instances demonstrate that while a halving's immediate effects may not appear very positive, the true bullish effects usually materialize once the market stabilizes. This is where it gets weird, however. Shiba Inu's moves are known to often match those of Bitcoin. Thus, this news should be quite encouraging for the cryptocurrency. On the other hand, the exact reverse is really occurring. Data revealed by well-known cryptocurrency trader and analyst Ali Martinez indicates that an incredible quantity of Shiba Inu has been moved to cryptocurrency trading platforms. And we are aware that this often indicates a desire to sell. The analyst's graphic shows that the total supply of Shiba Inu on cryptocurrency exchanges grew from around $144 trillion to over 147.5 trillion coins between May 14 and May 29. This indicates that more than $4 trillion, or around $103 million, worth of Shiba Inus were transferred to exchanges. It's interesting to note that the price of Shiba Inu surged by 21% in a matter of days on May 29th. But after this peak, there was a 12% drop, most likely as a result of the significant sell-off. There were two reductions in the price. After a short effort at a recovery, the first crash caused Shiba Inu's price to drop by 8.8%. A second crash then caused the price to drop by an additional 10%. This data raises the question of why individuals are selling at a time when the market seems to be in such good shape. The amount of money that has been added to Bitcoin for 13 consecutive days is incredible, and it seems that the halving event will soon begin to take effect. One of the few cryptocurrencies that stands to gain a lot from these advancements is Shiba Inu. Why then are individuals selling now? It doesn't really make sense. Here is what some believe did, in fact, occur. People were forced to sell after the recent increase in Shiba Inu prices that we saw a few days ago. Many investors see it as a very straightforward move since they all want to lock in a profit. It's normal for investors to take advantage of a fast price surge to cash out and realize their profits. This kind of behavior is common in the industry. Many traders sell when prices climb fast, so they may profit from the increase before it might decline. Thus, it most likely has nothing to do with the positive Bitcoin news. Rather, it's simply folks trying to profit from the recent increase in price by selling their Shiba Inu. The ensuing decline in the price of Shiba Inu was caused by this selling pressure. However, things become very intriguing at this point. The tendency of Shiba Inu pulling out of centralized whale exchanges has accelerated throughout the last 24 hours. Whales are the only animals exhibiting this tendency. Today, a well-known Shiba Inu whale's activities were brought to light by the cryptocurrency monitoring account Look on Chain. This investor removed from Binance around 58 billion Shiba Inu coins. In the meanwhile, a different whale moved more than 445 billion Shiba Inu tokens to a personal wallet from the American exchange Robinhood. In the last day, whales have removed more than 500 billion Shiba Inu tokens worth a total of more than $13 million from exchanges. What's captivating is that they behave in a way that is contrary to what most people do. And thus the issue is, in whom should you put your trust? The whales of Shiba Inu or most investors? On the one hand, it makes logical to trust the majority because of the widespread agreement shown in their collective behaviors. When a large number of investors choose to sell, it usually signifies a shared opinion or response to market circumstances. A trend that many people believe in may frequently be detected by this crowd behavior. Conversely, it may be more prudent to trust the whales since these big investors often possess more knowledge, resources, and expertise. Their noteworthy actions may indicate that they made strategic choices based on longer-term goals or deeper understanding. Large volumes of Shiba Inu being moved off exchanges by whales may be a sign of confidence in future price rises, indicating that they are getting ready for a possible increase rather than a sell-off. Who then do you believe? The whales, who may have a more strategic, long-term view, or the majority, who may be motivated by instant profit? It's a difficult decision that ultimately comes down to your risk tolerance and investing philosophy. But at this point, everything begins to make sense. The majority of individuals seem to be taking advantage of the current rise in Shiba Inu prices that occurred a few days ago. In the meanwhile, the whales are increasing the number of Shiba Inu they own in anticipation of a wider positive trend in the market. Do you recall the really positive Bitcoin news? Like the impending effects of the Bitcoin halving and 13 days in a row of millions of cash flowing in. But the whales seem to be preparing for it. The whales seem to be playing a longer game than other investors, who are primarily concerned with making short-term gains. Having a broad perspective, they are arranging themselves to take advantage of what they anticipate to be a major change in the market. This makes sense since whales may plan for long-term benefits rather than short-term advantages because they often have more resources and access to better knowledge. Their actions indicate that they are certain that a bull market is about to emerge, propelled by events such as the halving of Bitcoin and consistent inflows into Bitcoin ETFs. The whales are thus probably getting ready for a much bigger rise, while many investors are grabbing fast gains. This contrast in viewpoint, short-term profits against long-term strategy, highlights the different strategies used in the cryptocurrency market and emphasizes why it is sometimes possible to predict future market movements more clearly by paying attention to the activities of knowledgeable, seasoned investors. Still, do your own research and don't accept it as financial advice. That's not all, however. Examining Shiba Inu and exchange indicators more broadly, we see a pattern over the last few months. Reserves of Shiba Inu on centralized markets have been declining. Shiba Inu's exchange supply has been declining over the last 10 months, according to data from CryptoQuant. This suggests that there is a buildup of scarcity, which, if demand continues, might result in price increase. In March 2022, the exchange supply reached a high of 191 trillion Shiba Inu, and it has since dropped to around 150 trillion. This suggests that the current Shiba Inu wave has shrunk to about 150 trillion, and the bulk of holder selling is probably merely a temporary roadblock. Scarcity grows as the total amount of Shiba Inu on exchanges declines, and if demand is great, this usually results in higher pricing. The notion that the current selling is a passing fad, and that the long-term outlook is still positive, is supported by this pattern. The whales who are hoarding Shiba Inus are probably counting on the fact that these dogs will become more scarce, which will increase their value and give the impression that they have more profitable plans in the future. However, what are your thoughts about that? Please leave a comment below. I look forward to reading your thoughts. The date is over now. Remember to give it a big thumbs up. To see our most recent material, share it and subscribe to the channel.